Hello and welcome to today's review of the True Potential portfolios. My name is Chris Leyland and I'm an investment director here at True Potential. The format for today is I'm going to spend the next few minutes talking about our flagship investment product, the True Potential portfolio range. But first, let's just start by discussing the performance of the portfolios. What I then want to do is look at what are the key themes we're seeing from our fund manager partners and finally discuss what changes have been made over the month. The month of March has been a difficult one for markets, and this has been partially but not fully reflected in the performance of the True Potential range. Global markets overall fell by just over 5%, but the advanced diversification and multi-asset construction of the portfolios, as you can see, have helped to insulate them from such a heavy fall. By contrast, pure index trackers have had a torrid time, with global equities falling over the month and the US, Japan really struggling. Add in the falls in the major global bond markets, and you can see the positive effect of diversification combined with active management. However, at True Potential, we're not complacent. We recognise it's been an uncomfortable start to the year for many existing investors, and at the same time, it's actually been an opportunity for new clients. As you'd expect, in falling markets, the lower risk portfolios such as defensive and cautious have outperformed the more aggressive end of the range in the short term. However, looking out to the longer term, the track record is excellent, with aggressive showing a return of over 35% since the portfolios were launched in late 2015. Moving on to the performance of the underlying funds that make up the portfolios, the True Potential Goldman Sachs Income Builder Fund has performed very well, with its sterling hedging insulating from the negative effect of sterling strength over the month. The True Potential 7IM fund range has also helped to mitigate some of the negative performance seen, with a large positioning towards alternative assets, helping to offer less correlated or even uncorrelated returns to equities and bond markets. Our recent moves in the portfolios have been to increase the weighting of both GSAM and 7IM, and this has been rewarded well. Okay, so moving on to the key themes, which are formulated after speaking to our investment partners. The general feeling is one of cautious optimism. The global economy is very strong, with overall what we call global synchronized growth, so that's very positive. As interest rates move higher, QE is reduced or removed, market participants need to adjust to this new environment, which has and will lead to some volatility. During the recent market volatility, our managers have used the pullback in markets to add to positions. That means buying assets at more favourable prices. No changes were made to the positioning within the True Potential portfolios this month, following our monthly calls with our manager partners, as we believe the changes within the individual funds are repositioning by the managers in a way that resonates with our current thinking on markets. Okay, so in conclusion, we continue the transition to a new market environment, one of rising interest rates against a backdrop of strong economic growth. During any transition, there will be volatility, but the key to help mitigate this is diversification, something that we can offer to a new higher level through the True Potential portfolios, what we call advanced diversification. Thank you very much for listening, and I will see you next time. Thank you.